Welcome to the November Market Thoughts video. My name is Maria Considine King, and I'm joined by Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Brad, coming out of October, we had many people on the East Coast recovering from Hurricane Sandy. Can you talk to us about the longer-range economic impact of natural disasters like the hurricane?
That's a great question, because certainly Sandy roared in through New York and the mid-Atlantic states in a very big way, and the damage was extensive. That said, what we've seen with hurricanes and other natural disasters in the past is the long-term damage hasn't really been that substantial. Damage is caused, damage is fixed. That can actually result in a short-term blip upward to GDP as damage is fixed. It's not a long-term contribution to the capital stock, but it is a positive effect for the GDP. Long-term, not so much. One interesting avenue that there might be a long-term effect is gas prices. We saw that with Katrina, for example, which wiped out a lot of the, or at least shut down a lot of the New Orleans petrochemical complex. We don't actually expect to see that this time around, although some New Jersey refineries were shut down. So that shouldn't be as much of an issue this time around, if in fact it's an issue at all.
Also on people's minds in November is the presidential election. Now, during campaign season, we had one group of pundits argue that we'd be better off with Democrats, while another theorized we'd be better off with a Republican administration. What do you think of these types of theories, and do they have any credibility?
I believe it's a fact that the stock market has done better under Democrat administrations than Republican ones. That said, correlation is not causality, and I think the Republicans would argue that, first of all, perhaps that's because the Republicans laid the groundwork for the subsequent prosperity. And second of all, that perhaps the Republicans' stock market performance suffered because they were cleaning up the mess the Democrats had left behind. So I don't think the facts are one thing, but I don't think the interpretation is quite that clear. I think the significant economic positive that's going to come out of this election, regardless of who wins, is a reduction in the uncertainty level, because that, I think, is really what's holding back many parts of the recovery.
Looking overseas, we see that emerging markets have actually done pretty well over the past 12 months, in spite of concerns about Europe's financial situation and China's slowing growth. Can we expect those gains to continue?
I think it's reasonable to think that it will continue, and the reason I think that is twofold. First of all, the damage from Europe has already been done. So unless Europe gets much worse, I don't see that as a negative impact. Second, I see the U.S. continuing to grow modestly, and that will have a significant positive effect on those markets. Third of all, you're also seeing, to some extent, a development of their internal markets. Their growth is now more internally driven than it has been historically, and that's going to be much more sustainable going forward.
Going into the final few weeks of the year, what is it that you are hopeful about?
There's a lot to be hopeful for, Maria, and I think it's important to keep that in mind. First of all, as a recovery goes, we're actually on track with the notable exceptions of employment and personal income. What's holding that back is basically business uncertainty. Businesses are not going to hire, they're not going to pay people more if they're uncertain about the future. In fact, there's a very interesting chart that shows the relationship of unemployment to uncertainty. Uncertainty leads unemployment. Once that uncertainty is reduced, which I think, as I mentioned, we're going to see at with the election, at least to some extent, I expect to see hiring pick up again. Housing is another component of that. As that starts to recover, the reduction in uncertainty is only going to make that recovery stronger as well. Going forward, we certainly have things to worry about, but longer term, I think we're in pretty good shape, and there's a lot to be hopeful for.
Thank you, Brad.
Thank you, Maria.
And thank you. Please join us next month for the Market Thoughts video.